Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. equity index futures inched higher in Asian trading after Wall Street took a breather from the AI-driven rally. Help wanted. Bloomberg has learned Intel has approached Apple about a potential investment in the struggling chip maker. And Taiwan says it's suspending chip export controls it placed on South Africa just 2 days ago, a sign it is moving away from using the key tech export as a weapon in diplomatic disputes. It's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, taking a look at these markets. Well, somewhat of a breather yesterday for Wall Street. So we pulled back moderately. And remember, this is in response to that Powell speech the day before, where he suggested there were two sides risks to the economy: upside risk to inflation, downside risk to the labor market, not as categorically dovish as people were hoping for. And so we saw Wall Street somewhat stabilizing yesterday. Today, inching back towards the green, a better handover from Asia Pacific. Over there, once again, some of those AI-related stocks continue to outperform, the likes of Baidu, Alibaba, as our colleagues in Asia have been talking about, really having a good run the last couple of weeks. So that's boosting those indices. And of course, Hang Seng, not that it was ever offline, but things slowly returning back to normal after Typhoon Ragasa in the Asian session. 10-year yields, you can see, sitting at 4.14. Not a lot of movement there, but essentially the front end seems to be holding vis-a-vis what's priced in for this year. But of course, questions about whether there are going to be upside inflationary risks emerging in 2026. That's become more of a narrative. We'll discuss that with our next guest. And then Brent, just shy of $70 here, slipping a little bit in this trade, down 0.3%. But over the last couple of days, we actually have moved upwards, especially with some of the geopolitical risk premium once again being priced in. President Trump's more supportive comments towards Ukraine and critical comments of Russia being factored into the energy complex. Switching over, one huge domestic story that we covered yesterday on the show, and we will continue to cover on this show, is the price action in the Saudi stock exchange. Take a look at the Tadawul. We jumped 5% in yesterday's trade. And you can see that little spike at the end has happened just the last couple of trading sessions. Of course, it is weaker year to date, so still down 5% on the year. But we've covered a lot of ground just in the last couple of days on the Bloomberg reporting. Our colleagues sat down with Tadawul, with members of the CMA, and they suggested that they may be looking to increase the cap of foreign ownership on stocks within the Saudi stock market. So because of that, we've seen a massive repricing, especially in some of the stocks that could benefit from those inflows. So that was the Tadawul. We will talk more about it later on Horizons. Okay, let's also check in on how markets in Asia are faring. Min Lo is in our Hong Kong studio. Min, walk us through some of the price action, the handover overnight from Asia.
Yes, Jomana, as you said, markets taking a little bit of a breather, and here you can see it's trading a little bit mixed today. We have the Hang Seng up by 0.4%. We continue to see this exuberance pouring into Hong Kong markets, especially with the return of the tech darling Alibaba. Nikkei up by about 0.2%, supported by the weaker yen, and of course, bank stocks also going up today on the back of expectations of a BOJ rate hike in October. Kospi not doing a whole lot here, but flip the board. We're keeping an eye really on the Bank of Japan, on the Japan bond yields rather. And here you can see a sea of green here. Pointing down on the 40-year bond yield because we have the issuance of those ultra-long bonds today, seeing pretty solid demand. In fact, the bid-to-cover ratio was above the 12-month average, and it looks like the Japanese government's efforts so far to calm the jitters in the market has helped. The Ministry of Finance, for example, pledging to or proposing to reduce issuance of the longer end bonds, shifting focus to the shorter end, and the increase or the move up in the yield curve overall perhaps had been enough to entice more investors to buy the 40-year bond as well. And this is a good sign for G10 peers, especially because a lot of support is really needed in the longer end of the bond yields. But flip the board, here's a look at some of the stocks that we're looking at today. Alibaba, of course, continuing to see a second day of the rally here after the 9% gain that we saw in the session yesterday, 8% overnight in the US ADRs as well. We are seeing a sea of green across some of these Chinese gaming titles as well. That's after China had said that it has approved about 150 online games in the month of September. And so we are seeing Baidu up by 4% today.
Just incredible moves in some of those AI and internet stocks. Min, thank you so much for bringing them to us. Min Lo in Hong Kong. Well, we've just got some data breaking from Europe. This is European car sales. Let me bring you the figures. They've actually risen 4.7% in the last month from a year earlier. That brings the total number of units sold to just over 790,000. This is per the European Automobile Manufacturers Association. Sales of fully electric cars increased by 27%, and then plug-in hybrids saw a 56% rise. So this is sort of a pattern that has emerging. Obviously a rise in electric vehicle sales, but the best performing and the fastest growth in Europe seems to be in the hybrid space. As for individual companies, this always gets attention. European sales of Tesla dropped 22% in August. It only has a market share of about 1.9%. Meanwhile, Volkswagen, BMW, Mercedes-Benz, they all gained market share, and BYD actually tripled deliveries throughout the course of last month. So very interesting numbers coming through, but Tesla obviously attracting a lot of attention. Sales down 22.5% for the month annualized. And then year to date, Tesla sales in Europe are down 33%. So notable impact on Tesla sales in Europe. Okay, let's go back to markets now. Traders are awaiting fresh catalysts for the AI-driven rally on Wall Street amid labor market risks and persistent inflation. Joining us now is Sharma-Ong, Deputy Global Head of Multi-Asset Bespoke Solutions at Aberdeen Investments. Good to have you with us, Ray. You know, my colleague Min was just running through the price action of some of those AI internet-related stocks in China and in Asia that have really had a strong run the last couple of sessions. I do wonder now whether, if investors want to catch the next leg of AI excitement, whether you want to be positioned in China and less so in the US, where valuations are already so lofty.
Well, if you think about the AI landscape, there are four main hyperscale cloud providers. You have Amazon, you have Microsoft, you have Google, you also have Alibaba. And Alibaba was obviously mentioned earlier on that end. I would recommend allocating across to all of them because that's where all the investments are pouring in at the moment in time. And it is structural. It is not a one-off leg up. And obviously markets don't trade in a straight line. You would get pullbacks from time to time as valuations get a bit stretched. And that's where we would recommend looking at the pullbacks to take on more positions on that end.
Yeah, do you think that this rally in Chinese equities is sustainable? Because we've come a very long way in a short amount of time.
Yes, that's a very, very important question. And our view is, yes, it is sustainable. Obviously, we don't expect it to rally as fast, as hard as it had over the last 2 months on our end. But the factors are in play and very strong factors. So factor number one would be China on its end right now has demonstrated technology self-reliance. And that on its own already warrants a lot of investors' interest. You can see last month they released DeepSeek 3.1. Alibaba has also pledged a huge increase in AI infrastructure investment. So technology self-reliance is one anchor that will support the Chinese market. The liquidity conditions in China, too, are also very supportive. In addition to liquidity in the market, we've seen household deposits shifting into financial assets because deposit rates are falling. And the government is really focused on really wanting to support the capital markets without introducing a bubble. And that gives us the confidence that the markets will grind up, but you're not going to get exuberance on that end. So it's going to be in a disciplined way.
Yeah. It's funny, people were so negative on China at the beginning of the year. It really is somewhat of a turnaround story to talk about some of the surprises that have come through in 2025. Let me just turn to the U.S. now. We have a little under 2 further rate cuts priced in to the U.S. curve by the end of this year. Do you think that that is valid, or are investors being too optimistic on what the Fed may deliver, especially given Powell's more cautious comments a couple of days ago?
Yes, certainly. So Powell was doing his job. Basically, he wanted to ensure that there is Fed independence. He was trying to reaffirm that message, and he wanted to say they would be data dependent on an end. And so it is not risk-free. Whatever the dot plots had indicated, 2 rate cuts down the road for the rest of this year, they are going to look at the data to determine that. Now, our view is that that is valid, but if you go further out into next year, 2026, we expect increased momentum for further rate cuts on that end. Partially because by the mid of next year, Powell will be replaced and Trump will likely pick a more dovish Fed chair successor on that end. And naturally, the narrative and the key signposts that the Fed would look at will also be more biased towards more easing on that end.
Do you think the Fed were behind the curve in terms of administering the first interest rate cut, as some critics have suggested?
Actually, on the flip side, we think that the Fed is ahead of the curve. The narrative has been around wanting to manage risk. It was a risk-managed cut. And therefore, they decided to do that ahead. And they've also indicated their reaction function has pivoted from really a lot of emphasis initially on inflation, now right down to the labor markets. So the way we see is that they emphasize a lot more on the labor markets relative to inflation. So in the event where the labor markets start to show additional cracks, we foresee the Fed actually taking a lot more strong actions to be able to ease on that end. If you couple that reaction function going into next year with the potential of the Fed chair being replaced by a more dovish Fed chair, we actually foresee a rate cutting cycle, something that's a lot more prolonged than what the current markets are pricing. And we think that's going to be very positive for risk assets.
Yeah. Okay. Ray, so nice to chat to you. Ray Sharma-Ong, Deputy Global Head of Multi-Asset Bespoke Solutions at Aberdeen Investments. And later today on Bloomberg Surveillance, we speak live with the new Fed Governor, Stephen Miron. That is at 4 p.m. if you're watching in Dubai, 1 p.m. in London. And Bloomberg has learned that Intel has approached Apple about a potential investment in the struggling chipmaker, part of its comeback push after the U.S. government took a stake. Sources say the companies have also discussed a closer cooperation. Apple was a longtime Intel customer that switched to in-house processors in the past 5 years, with its most sophisticated chips made by TSMC. And up next, Saudi Arabian stocks surge over potential changes to the foreign ownership laws. Francis Ames of Ajeej Capital joins us to discuss the impact. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Saudi Arabia's stock market surged after Bloomberg reported the kingdom may soon ease foreign ownership limits for listed companies. Investors are betting on a flood of investment to the Gulf nation if it eases the current cap of 49%. Joining us now is Francis Ames, Director and Head of Research at Ajeej Capital. Well, Francis, you have been a longtime investor in the region. I know there had been market chatter about the potential lifting of these cap on foreign ownerships, and yet still yesterday we had such a substantial reaction in Tadawul. How much of that do you think is baked into the price, and how much of this is actually a positive surprise to investors who, like yourself, have been trading and looking at local equities for many years now?
I think obviously the timing of this was a nice National Day gift from Saudi Arabia, but I think this has been discussed for a long time, right? That this is an option. It would be great for this to happen. We would love more foreign investors coming into the market. This has been a limitation. So it's positive. It's been discussed. Obviously, the day of the announcement is always very exciting. And afterward, there's a lot of potential for more liquidity to come into the market. And I think that's what you saw market participants pretty excited about yesterday.
Yeah. I mean, at this point, obviously, it's still Bloomberg reporting hasn't been completely finalized yet, but it seems like, the work is in motion at least. What names do you think would stand to benefit the most in terms of the potential inflows coming into Saudi?
Well, I think in general, that's been pretty widely discussed. It's the large and liquid names, in particular, Rajhi and SNB, the two largest banks, just by the nature of them. Now, there's always a number of regulatory steps that would have to happen between this announcement coming and those banks actually being fully open. We've seen that in a number of markets. It sometimes takes some time. Different restrictions can happen, but overall, this is very positive, and it's particularly positive for Rajhi. I think the calculations are that Rajhi would be a top 10 name as a single EM company globally in the MSCI index if you did the calculations of what the sizing could be without a foreign ownership limit.
Yeah, interesting that. And obviously the MSCI component could be a major factor as well, determinant for further inflows coming into Saudi Arabia. As a local and sort of regional focused asset manager, do you welcome the addition, or would you welcome the potential addition of new foreign asset managers into the region as well?
Yes, certainly. I mean, I think in general, liquidity is a tide that lifts all boats, right? It's very helpful. And, in the largest names, but also further down into the market, we see active managers globally are still pretty underweight Saudi Arabia. I think it's one of their largest underweights within EM. And so to see, hopefully, this news trigger more active managers to come and look at the market, particularly some of the smaller and mid-cap companies, which we view as, very high quality businesses, where sometimes the only lacking thing is market liquidity. We see this as a huge positive, right? Because that liquidity can trickle down beyond just those top few names.
Yeah. So I see this as sort of it's a structural adjustment. It's regulatory driven, but then we can't avoid the macro as well, Francis, and the fact that the Tadawul really has underperformed so much this year. It's one of the worst performing global indices. How much of that is simply just the oil effect, do you think? And at what point are foreign investors going to be able to dissociate the Tadawul index from what's happening to the price of oil, given the diversification efforts in the kingdom?
I mean, I think we've seen massive evolution in that just in the last 5 or 6 years, right? I do think there's a large number of investors now that focus very significantly on the non-oil part of the Saudi market. That share of the Saudi economy has grown quite a bit. Right. There's obviously more to go. There's more development. But, yes, it's been, you can view it as a great opportunity to buy, right? The weakness that we've seen this year, because the fundamentals of a lot of the companies have remained quite strong, right? I just met, a number of these companies in the last few weeks at various conferences. And in general, the tone is quite bullish, and that hasn't been reflected in the market. So one hopes that announcements like this can just, as I said, drive interest throughout the market itself, not only those top names, which is very important, but also into, the, almost 200 companies now, right, that we view as pretty highly investable in that market.
Yeah. Do you think this is going to unlock potential more IPO activity as we head into the last couple of months of the year?
I mean, IPO activity has been a sprint for the last 5 years. It's been pretty nonstop, I think, from our perspective as a local asset manager. I think the whole team has been nonstop on this, now coming up to 5 years. But certainly, there is a deal pipeline. I think we're always aware of the deal pipeline, and it's great. News like this can sometimes help accelerate what's really a company decision, right, in the end, to move forward with a listing. And I do think there's some really interesting, very high quality names that we know are preparing to list. So hopefully this does, support that decision.
Yeah, and then just to round things up, how do you think this sets the Tadawul up to compete with other regional indices?
And I think it's already pretty well set up, right? Like this is a very deep market within the region. You've had, yes, very strong performance in some of the other markets this year, but I think you've had strong performance in Saudi, in the previous couple of years. So I think overall, the whole move in the GCC has been excellent for the last few years, right? As more companies have listed, as companies have grown, as you've seen really significant inbound investment and also domestic investment in growing these economies, that's improved all markets. And yes, Saudi, it's been a challenging first part of the year, but hopefully this news kind of allows people to clear their heads and focus on, where things can go from here.
Yeah. Francis Ames, Director, Head of Research at Ajeej Capital, thank you so much for joining us on really quite a significant day for the Tadawul, and we'll keep a close eye on how things fare in today's session as well. Thanks for joining us. And coming up, Taiwan pulling back on chip export curbs just 2 days after targeting South Africa. We look into why the sudden reversal next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, Taiwan is stepping back from chip export curbs on South Africa just 2 days after imposing them. For more, let's bring in Bloomberg senior Africa reporter Lonnie Prinsloo in Johannesburg. So this was a big issue that emerged, and our colleague Jennifer Zabazaja actually raised it with the South Africa trade minister on the sidelines of the UN General Assembly. But it seems like Taiwan has now changed its mind on those chip exports. Bring us up to speed. Why did they introduce them to begin with? And why the change, the sudden, U-turn in terms of allowing now these chip exports to go through?
Hi, Giovanna. So basically, there's been some pressure on Taiwan from about 2023 to move their de facto sort of embassy from our capital, which is Pretoria, to Johannesburg. And that seems to be under the pressure of China asking South Africa to assist that sort of move. And the diplomatic sort of pressure and spat has just sort of grown from there.
And what is the expectation within South Africa as to how this may move the needle on relations with Taiwan, with the East? This was obviously a very significant incident. Can the two sides move on from this?
Yeah, so that's the first time we saw Taiwan actually move and almost sort of weaponize this advantage it has in chips, semiconductor chips. And South Africa responded with an interesting response saying that, we produced the bulk of palladium used in these chips in the world. And we might just start making more or value adding more of these in country, sort of indicating that there could be some limitations on palladium then going to Taiwan, which I think then could have assisted in Taiwan stepping back. Going forward, it's unclear still where this will end up, but it seems that the two sides have been speaking some.
Yeah, well, that's good. Speaking is good. Lonnie Prinsloo in Johannesburg, thank you so much for bringing us the latest on Taiwan and South Africa. Okay, look at equity futures. Trading sideways, markets are stabilizing, though better handover from Asian markets this morning. S&P futures up 16 basis points. We do get GDP data later today, in addition to the regular jobless claims figures, which people have been watching more and more closely. European markets unchanged as we head into the open. Coming up, U.S. envoy Steve Witkoff is predicting a breakthrough in the Israel-Hamas war and that it could be coming soon. We are live in Jerusalem with the latest next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Saudi stock surge. The Tadawul all-share index jumped 5.1% in Wednesday's trade after Bloomberg's reporting that the kingdom may soon ease foreign ownership limits for listed companies. Help wanted. Bloomberg has learned Intel has approached Apple about a potential investment in the struggling chipmaker. And U.S. envoy Steve Witkoff is predicting a breakthrough in the Israel-Hamas war in the coming days after Trump met with Arab leaders on the sidelines of the UN General Assembly. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. So much going on the geopolitical side of things. All of those major speeches, discussions at the UNGA. We're going to get into some of the regional dynamics in just a moment. But markets, as ever, Wall Street saw a bit of a pullback yesterday. Today, leaning towards the green, up 16 basis points. And people are saying that we're stabilizing somewhat. Makes sense. We've had a massive run-up. We're close to all-time record highs. And, of course, Powell, a couple of days ago, did suggest that there were actually two side risks risks to the economy and potential inflation risks were emerging alongside other Fed policymakers who've also sounded a bit more cautious about the prospects for further interest rate cuts. So we are stepping on the brakes a little bit for U.S. markets. As for Asia Pacific, the handover has been positive today, up 0.2% for the broader index, as you can see. Hang Seng very much back online again with the worst of the typhoon behind us now. And again, a lot of attention still on some of those AI stocks. We'll get to that in a moment. 10-year yield sitting at 4.14. We have a little under 2 further rate cuts priced in by the end of this year now in the U.S. yield curve. And then Brent just shy of $70, $69 is where we're at. Let's switch over. One of our top stories from yesterday and today, ongoing reaction in the Saudi Tadawul stock exchange on back of our own reporting, Bloomberg reporting that the regulator may look to ease the foreign ownership caps on Saudi stocks. We've seen a massive reaction. You see that spike up yesterday, still down 5% for the year, but a lot of positivity and bullishness around the prospects for the Tadawul on back of these loosening of regulatory requirements. All right, let's check in on how markets in Asia are faring as well. Min Min Lo is in our Hong Kong studio. Back in the studio, I should say, Min Min. Good to see you back.
Yes, Joanna, good to be back. I'm fighting the jet lag, though. It's a really hard day for me coming back to the studio today. But here we are shifting focus a little bit, taking a look at copper stocks, because we have a mining company, Freeport-McMoRan, declaring force majeure on its contracted supplies after a mining accident in Indonesia. That is the second largest source of the metal. We have been seeing demand for the metal soaring. It's required in electronics, but a string of accidents and disruptions have been really threatening the global supply chain. And here you can see big gains across some of these mining stocks here. But flip the board, we're taking a look at the bond market as well. Japan issued the long end 40-year Japanese government bonds today and seeing pretty solid demand, which is good news for G10 peers, given that a lot of support is needed in the longer end here. And it looks like the Japanese government efforts so far to calm the anxiety regarding the rising bond yields has really helped, with the Ministry of Finance proposing to cut issuance of longer end bonds, and perhaps that steepening of the yield curve was enough to entice more investors to buy into those longer end bonds as well. But flip the board, we're taking a look at what we're watching out for in Chinese markets, and again, a sea of green in the tech space. Of course, Alibaba is that news about how the company is ramping up AI spending. We continue to see that this rally, it looks like, has legs to run now. This is the second day of the rally, up by about 0.5% after a 9% gain yesterday. And overnight in the US, the ADRs were up by about 8% as well. And Tencent, Baidu, NetEase, this is a gaming story, with the Chinese government saying that they have approved about 150 online games in the month of September, with the biggest beneficiary being Baidu, up by about 4.3%.
Yeah, also this morning we were noting the rollout of some of their robo-taxi plans over here in Dubai. So another potential positive tailwind for Baidu as well. Min Min Lo in Hong Kong, thank you so much. Now, U.S. envoy Steve Witkoff is predicting a breakthrough in the Israel-Hamas war in the coming days. That's after President Trump presented a plan to regional leaders gathered at the United Nations General Assembly. Israeli Prime Minister Benjamin Netanyahu says he will meet President Trump at the White House to discuss what he describes as the need to complete the war objectives. Let's get to Jerusalem now and speak to Bloomberg's Dan Williams. So plenty of reporting coming through overnight that Steve Witkoff has presented this 21-point plan for Gaza and for the broader Middle East region. What do we understand is in that plan?
Excellent question. Details have been scant so far, at least those made public. I think what we can know from Israel's standpoint, obviously a major party here, and a party that's going to come under increasing scrutiny at this UN General Assembly now that the Prime Minister Netanyahu is en route there. Israel's stance is it's open to anything, specifically as long as its core demands, a toppling of Hamas, a disarming of Hamas, and an immediate return of all those remaining hostages held by Hamas in the Gaza Strip, are met. Now, Witkoff, like his boss, the US president, is business-minded. Presumably, he wants to sell this plan to the wider Arab world. Presumably, this is a plan that would lead not just to a stripping of Hamas capabilities and a neutralization of those capabilities in Gaza, but to something more positive, affirmative, forward-looking, constructive. So presumably there's a great deal of detail there. We still don't know. What we've been told from the Israeli side is that Netanyahu expects to be briefed by the US president, by Trump, when they meet. Meanwhile, before then, Netanyahu will be addressing the UN General Assembly in its final hours, probably a message of defiance in the face of increased recognition of Palestinian statehood earlier in the week, and Israel's insistence, as you noted, on its basic terms for ending this war victorious.
Well, there are almost two tracks that have emerged out of the UN General Assembly this week, but the more longer-term project, and many European nations have emphasized that they want to keep the prospect of a two-state solution alive. So that's one track. The other track is the immediacy of the war as well. What are we expecting to hear out of the Israeli Prime Minister when he does address the UN General Assembly, not just on the two-state solution, because Israel have been very adamant on that front that there will be no Palestinian state, at least this government has, but when it comes to the war?
Well, going back decades, Netanyahu has been publicly scornful of this forum, while also being quite proud of his ability to address it in his telegenic English. He will probably come and pretty much sharpen messages we've heard in previous years, that the UN, at least those powers who have recognized Palestinian statehood prematurely, as far as Israel is concerned, and the United States, that they are on the wrong side of history. He'll probably make that argument. He very much sees himself as son of a historian, as someone who understands the arc of history. However, the situation really does seem very different to Israel, because now a number of its friends in the West, European powers, Canada, etc., have joined in recognizing Palestinian statehood. It would appear that Israel's strategy of defiance hangs on the continued support of the United States, of this administration. And Netanyahu may feel a ticking clock in terms of getting this deal done, getting the Gaza war over in a way that he can sell to the Israeli public as having been victorious, or at least positive, or positively change that situation in a way that would make Arab partners or potential partners of Israel feel that they can get back on side with the Trump plan for increasing cooperation and recognition between Arab powers and Israel. So there's a lot at stake here, a lot of plans being bandied about. And until we see those leaders making their statements publicly, we will simply not know to what degree there's traction there and to what degree we can expect real change in the coming days, even as the war proceeds in Gaza City.
And at the same time, President Trump did hold a meeting on the sidelines of the UNGA with several Arab leaders. Now, it was a closed-door session. There was no readout. Politico reporting that during those discussions, Trump actually promised leaders that he would not allow Israel to annex the West Bank. So if that is the situation, how does that set the Israeli Prime Minister up within his own government? Because, of course, there have been many within the Israeli government, on the members, on the far right, who have been calling for the annexation of the West Bank. Could this be problematic for him domestically?
Indeed, and I think those reports, there's no reason not to believe them. This has been a core demand of the Arab community going back decades. And indeed, it was really the reason that the UAE stepped forward 5 years ago under the first Trump administration to forge the Abraham Accords. The first of the countries, the UAE, said that it got Israel to hold off or cancel a planned annexation in or of the West Bank. So were Israel to launch that now, it would really be endangering some pretty core ties, existing ties in the Arab world. However, there may be a stopgap. If those reports are true, there's a question of whether Trump is against a full annexation of the West Bank or and might be open to a partial annexation. The Israelis have been speaking about a potential annexation of the Jordan Valley. That's a narrow band that's effectively the eastern boundary of the West Bank with the Kingdom of Jordan. The question is whether Trump would accept that, whether powers like Saudi Arabia, UAE would accept that, and whether the nationalist base that Netanyahu is looking to within Israel would accept that as a stopgap. Again, time will tell, but Netanyahu has pretty much hinted that he will respond to the recognition of Palestinian statehood. The question is how he might respond, whether this might be a punitive response in terms of a partial or full annexation declaration, and what the fallout of that might be.
Bloomberg's Dan Williams in Jerusalem. Excellent reporting, as ever. Thank you so much. Now, Turkish President Recep Tayyip Erdogan is set to visit the White House later today for the first time in 6 years. It comes as the two NATO members look to repair ties shaken by diplomatic spats, mutual sanctions, and disputes over regional policy. Joining us now is Onur Ant, Bloomberg's managing editor for Middle East and North Africa. Onur, well, the relationship between Erdogan and Trump is pretty testy. It has been. It's significant that he is actually having a bilateral with President Trump later today. What's on slate? Is it deals or is it politics they're going to be talking about?
It's a great point. Everybody likes to talk about how the two have a great rapport, which they probably do, but the relationship hasn't been smooth over the years. We have seen them basically argue over diplomatic routes over the past few years. There was even a time when President Trump threatened to destroy Turkey's economy with a tweet 6-7 years ago,
and the currency collapsed.
That's true. It was back in 2018, and the last trip by Erdogan to the White House was in 2019. So this time around, it's a completely different world. Obviously, there is upside for both leaders from this meeting. Erdogan is going to show up with a very big shopping list, and that's the main thing that he is going to try to leverage to turn the meeting from a commercial deal alone into something that marks a turning point for the relationship, which, as you said, has been testy over the last few years, and Erdogan wants that to come to an end, because that's also important for his own political career. So we're going to see today that President Erdogan will show up with a big shopping list, and we want to make this meeting a turning point in the bilateral ties.
How do you think the U.S. views Turkey as a partner in terms of advancing their ambitions for Syria? Because what we saw this week was a very global recognition, rehabilitation of the Syrian president, Ahmed al-Shara. There has been Turkish support for this new Syrian government. To what extent do you think the U.S. may feel, or President Trump may feel, that it is important to work with President Erdogan when it comes to Syria and the development of Syria in the coming years?
Syria has definitely been at the center, at the heart of the relationship over the last 10 years, at least since 2015, when the U.S. first started arming Kurdish militant groups in the area that Turkey always said were a bunch of terrorists, right? And there was a big disagreement. Now, on the other hand, they do share a lot in common, especially since the fall of Assad last year. Now, just like the U.S., Turkey does want al-Shara and his government to be part of the international community again, but still there are some key disagreements. And again, those disagreements surround the issue of Kurdish militants in the area. As you know, Turkey had its own peace process with an insurgent Kurdish group, but now they fear that some of those Kurdish insurgents may slip into Syria and continue to pose a threat to Turkey from there. The U.S. is not exactly on the same page, but at the same time, the upside to both countries from collaboration in Syria is so great that at least Turkish officials see today's meeting paving the way for greater collaboration in Syria, especially in terms of making al-Shara and his government stronger and part of the international community.
And we should keep an eye out also for some of the deals that may be inked as well on oil and potentially those F-35s too. Yeah. Onur, thank you so much. Onur Ant, Bloomberg's managing editor for Middle East and North Africa. Now for a look at some of the other stories we're following today. The French President Emmanuel Macron has told his Iranian counterpart Masoud Pezeshkian that Tehran has only hours remaining to avoid sanctions over its nuclear program. They met on the sidelines of the UN General Assembly, where Macron reiterated demands for Iran to allow full access for IAEA inspectors, transparency on enriched material stockpiles, and immediate resumption of negotiations. The Iranian president addressed the issue during a speech at UNGA.
Iran has never sought and will never seek to build a nuclear bomb. We do not seek nuclear weapons. This is our belief based on the edict issued by the Supreme Leader and by religious authorities. Therefore, we never sought weapons of mass destruction, nor will we ever seek them.
Syria's president has made his debut on the international stage with the first General Assembly address by a leader from his country in more than half a century. Ahmed al-Shara says Syria has entered a new chapter and could help stabilize the wider Middle East if the international community backs its rehabilitation after almost 15 years of civil war. He added that Syria's laws are being reformed and investors' rights will be guaranteed. Following this, Saudi Arabia and Qatar have reportedly offered joint funding of $89 million to Syria. State-run Qatar news agency says the money has been allocated for basic services and to bolster the state budget. Turkey's main opposition party has re-elected Özgür Çelik as the head of its Istanbul branch. That's after the election board ruled that the CHP can go ahead with its Congress to choose new leadership. The decision came after an extraordinary meeting of the Supreme Election Council called in response to a court order suspending Wednesday's Congress. Turkish stocks rebounded after slumping on news of the court ruling. Coming up, Malawi has tapped in its former president to lead the country again. Details on Peter Mutharika's return next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Malawi has elected its former president again, 5 years after he left office over high levels of corruption. Bloomberg's Ndiro Ganga joins us now for more on Peter Mutharika's return. What were some of the key issues that decided this election, and is ultimately the result a surprise?
Good morning, Jumana. So there are a couple of issues that decided this elections, one of them being the country has been battling a cost of living crisis. Inflation is at 27%. Then you couple it with other issues like a biting fuel shortage, plus unemployment in a country where the current administration had promised to create at least 1 million jobs for the local youth. This is a small economy that depends heavily on tobacco, tea, and tourism. And we've seen the economy in the last 5 years grow very slowly at 2%. And this is much slower than the pace at which the economy is growing. Then you couple this with the fact that the net international reserves hit $2 billion in the negative territory. There's a biting effect shortage in the country. And so importation of essential goods has become nearly impossible. And this is some of the factors that broke the camel's back when it comes to these elections. And so going into this cycle, it was President Lazarus Chakware's election to lose. He did a national address where he took note of the fact that the economy has been really tumultuous, but he only stopped short of taking responsibility, blaming government officials and almost promising if he's re-elected back into office, then he's going to fire them. But the people are not necessarily having it. There was already a target on his back. If you look at opinion polls, he was 10 points behind Peter Mutharika, and come the elections, the people have sent a really resounding message to the ruling administration that they want nothing to do with the incompetence that they have displayed in the last 5 years. But then again, if you look at Peter Mutharika, he's no stranger into power. He's been a president before. He was voted out during a very controversial election, and the court ended up ordering a rerun. And his tenure was marred with allegations of corruption and economic stagnation. This time around, he's promising to revive the economy, give loans to SMEs, and also subsidize agriculture. But whether he delivers or not, that's not the point. The people have made it very clear. If you don't deliver, we will vote you out.
And in what way is this election representative of other elections that have taken place throughout the African continent?
Jumana, currently inaction is being punished at the ballot box. Take a look at Ghana, which went to the general elections towards the end of 2024. NPP suffered a gut-wrenching defeat. And the last 4 years of the administration were really rocky. Ghana defaulted on its international loans and also on its domestic debt. And what we saw is GDP, debt to GDP rather, rose over 80%. We saw their currency down 60%. Inflation was as high as 54%. And this frustration spilled from households all the way to the streets. And when the elections came, the NDC, led by John Mahama, had a resounding victory, and they've done well by themselves. Where in the first 90 days of the administration, they were able to sort of turn the economy around. But if you look at a country like Botswana, it wasn't very clear that they were actually going to lose. In fact, the former president, Mokgweetsi Masisi, joked that he hadn't even packed a shoe. But because there was biting cost of living crisis and also unemployment, the ruling party was kicked out of power after 50 years. And, you know, people are not just waiting for 5 years to punish you at the ballot. If you look at Kenya, they're cranking up the heat on the government with protests almost annually.
Bloomberg's Ndiro Ganga, thank you so much. Well, for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and our website. You can now also get the latest news from the continent on our weekly podcast, available on Apple, Spotify, and wherever you get your podcasts. And for a deeper dive, catch our TV show, Next Africa, airing on TV on the last Friday of every month. You can still watch our previous episodes in full on your terminal, our website, and on YouTube. Coming up, we hear from the World Bank president, who says electricity is a basic human right, without which progress is difficult. Ajay Banga's words next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. The World Bank president says electricity is a basic human right and we must do something about it. Ajay Banga has been speaking on a panel at Bloomberg Philanthropies Global Forum with Bloomberg's Jennifer Zabazaja. This is after the African Development Bank and Michael Bloomberg launched a partnership aimed at attracting more private sector investment into Africa.
Electricity is a basic right. It's a fundamental right. Because without that, you can't have health, education, anything delivered. And so we tried to go at that and said, let's put a big number out there and see if we can get there. The World Bank had connected 100 million people to power over the prior decade. So the idea was, at our size, was, can we go to, say, 250 in 5 or 6 years?
That was World Bank President Ajay Banga speaking at the Bloomberg Philanthropies Global Forum. Well, let's round up the show taking a look at futures, how equities are trading. U.S. equities inching towards the green, up about 0.1%, though we ended yesterday's session in the red. European markets also seen opening down today, about 7 basis points weaker. On slate, you want to watch out for GDP data that's coming out in the U.S. We also have durable goods and the weekly jobless claims. Obviously, that's going to be in focus. But then keeping an eye on all of these AI-related stocks as we speak to some of the very strong performance in Baidu, Alibaba coming through from the Asian session. This is going to have knock-on effects globally. Yesterday was a humongous corporate issuance deal out of Oracle and really just speaks to how much optimism there is around AI capex spending. That's it for the show. I'm Joanna Versace in Dubai.